It is really fascinating to see how AI, which was just a buzzword a few years ago, is already impacting millions of lives. Today, AI is already sitting inside our email, our phone, our bank account, our hospital system, and even companies' workflow. And the latest update on AI says that humans don't need to code anymore. Now, there's a lot of debate on whether AI can become a massive threat to humanity or can it open a whole new world of opportunities. Personally, I believe that today AI is very similar to where the internet was in the late 90s or early 2000s. So just like how the internet became a part of our everyday life, AI will become a part of our daily life. And just like internet companies created massive wealth, some AI companies will create massive wealth for investors. And that's where many people requested me to discuss AI-based companies in India. But unfortunately, India is way behind the AI race. If you really want to participate in the AI theme, the best stocks are listed in the US market. That's where in today's video, I want to discuss 7 such US-based stocks that are leading the AI race in the world. Having said this, you should be clearly aware of key risk while investing in AI theme. So watch this video till the end. Alright, let's get started. First stock in the list is Nvidia, the poster child of AI. The rise of Nvidia is nothing short of miracle. Today, Nvidia has become the largest company in the world in terms of market cap. Do you know why Nvidia was able to beat companies like Google, Apple, Microsoft to become the most valuable company in the world? The reason is simple. Every single AI company, be it OpenAI, Anthropic, Google, Meta, Microsoft, they all depend upon Nvidia GPUs for processing terabytes and terabytes of data. Now, everyone knows about Nvidia dominance in GPUs. But very few people know that Nvidia is not only a chip manufacturer. It has also built a proprietary software ecosystem called CUDA that allows developers to program Nvidia GPUs efficiently. Over the last more than 15 years, many universities, researchers, startups, enterprises have built their AI code using Nvidia's stack. And that creates the moat. So when companies like Meta, Google or Tesla want to build AI capability, they don't want to buy a random chip. They often buy Nvidia-based infrastructure. This rise of Nvidia is clearly visible in companies' financials. It simply exploded in 23 and 24, and its pre-tax income has exploded 700% in January 24, followed with 150% growth in January 25. Now the thing is, we are still early in enterprise AI adoption phase. Most companies are still experimenting. Very few have fully integrated AI into the core workflow. If AI moves from pilot to production across industries, like banking, healthcare, manufacturing, compute demand can remain very high for years. So earlier it was very complicated to invest in companies like Nvidia from India. There were currency issues, access problem, operational friction, everything was complicated. But today platforms like Vested have made this surprisingly simple. It basically allows Indian investors to access global markets and invest in international companies and themes that otherwise remain out of reach. Let me just quickly show you the KYC process. So just need to enter your email ID and enter the password, then enter your mobile number and verify it. Then enter details like your nationality, marital status, etc. Then you can verify your detail via Aadhaar card, either via DigiLocker or manually. Once it's done, enter a few details related to investment behavior. Then select a plan that suits your need. Here basic plan is free. Then accept the terms and conditions and submit detail and you are done. Next, you need to add funds before investing. So here you just need to simply add a bank and enter detail. Then add the amount you want to add. Next, you will see how much USD you will receive along with the forex rate and other fee. Simply verify the detail, click on submit and you are done. So while we are discussing AI leaders today, the bigger idea here is that investors now have the ability to look beyond just one country and participate in global innovation cycle as they unfold. Alright, now let's continue with the next company. So second stock in the list is Alphabet, parent company of Google. Now this is very interesting. For last 2 decades, Google has dominated the world of search engine. And its search engine has been a massive cash cow for Alphabet. But with rise of tools like ChatGPT, Grok, everyone thought that now Google dominance would get over. But that did not happen. Because Google was already ahead of the curve in AI research. It was ready with Gemini that directly got integrated into its search engine. In fact, today, Alphabet is one of the rare companies that is vertically integrated across the AI value chain. So in this value chain, first is chip design. Apart from using Nvidia GPUs, Google also designed its own TPUs. So unlike other companies, it reduces Alphabet dependency on Nvidia and gives better control over hardware. Second layer is data center. Google already owns and operates massive global data centers infrastructure. That's core to AI scale. Third is LLM model. Through Google DeepMind, Alphabet is already at the frontier of AI research along with training the models using TPUs. Then fourth layer is cloud distribution. Through Google Cloud, it offers AI infrastructure and models to enterprises. Next is consumer distribution. This is where Alphabet is uniquely powerful. Today, billions of users already use Google Search, YouTube, Android, Chrome, Gmail, and AI has already been integrated into these products. Now, as far as financials are concerned, Alphabet is already a $1 trillion giant earning $400 billion revenue. So revenue growth is not explosive due to massive business size. However, its pre-tax income has grown at 30% CAGR rate in last couple of years. Going forward, Alphabet would continue to upgrade its AI model and integrate it across the ecosystem. This would not only help Alphabet defend its core cache engine, that is Google Search, but would also help in expanding to new high growth areas like cloud service for enterprises, as well as AI specific revenue stream. That could be AI assistant, agent, consumer AI subscription, and so on. Now, in case you want to invest in US stocks like Alphabet, you just need to simply search the name Alphabet Class A on Vested, enter share quantity or amount you want to invest, and slide to place the order. The best part is you can invest with as low as $1. Then third stock is AMD. Now this one is interesting because whenever we talk about AI chips, the conversation automatically goes to Nvidia. But AMD is the most serious challenger in this space. For years, AMD was seen as the underdog in semiconductors. It competed with Intel in CPUs and slowly gained market share in data centers. But with rise of AI, AMD entered into high-performance AI accelerator market with its MI series chips. Today, hyperscalers and enterprises do not want to be fully dependent on Nvidia. Because when one company controls majority of AI training compute, pricing power becomes very strong. So large players like Microsoft, Meta, Amazon are actively looking for alternatives. And that's where AMD comes in. So if AI compute demand remains structurally high for years, and if customers want a second supplier to diversify risk and negotiate the pricing, AMD does not need to beat Nvidia. It just needs to capture a meaningful share of incremental demand. Now from financial lens, AMD revenue has doubled since December 21. Pre-tax income has witnessed sharp volatility, but it has simply exploded since December 23. Overall, AI opportunity has created structural growth opportunity for AMD beyond traditional PCs and CPUs. Now, fourth stock in the list is Broadcom. Broadcom is different from Nvidia and AMD. It is not a pure GPU company. Instead, it plays a critical role in the infrastructure layer of AI. As AI models scale, it's not just about powerful chips. It's about connecting thousands of chips together at ultra high speeds. Training large models requires massive data movement between servers. And that's where Broadcom benefits. Broadcom is a leader in networking chips, switching solution, and custom silicons used inside data center. So as hyperscalers build large AI clusters, demand for high performance networking increases significantly. Second, Broadcom partners with cloud players to design custom AI chips called ASICs. So even if a company is not buying Nvidia GPUs, Broadcom may still be involved in enabling that AI hardware. From a financial lens, Broadcom has delivered steady revenue growth, nothing explosive but steady. While its pre-tax income growth is not steady, overall it has grown 4 times in last 4 years. Fifth stock is Micron Technology. Now Micron operates in a very different part of AI value chain. It is not designing GPUs or networking chips. Instead, it manufactures the memory, DRAM and NAND. And in an AI world, memory becomes extremely critical. Training and running large AI models require enormous amount of high bandwidth memory called HBM. The more complex the model, the more memory it needs to store parameters and process the data efficiently. Without advanced memory, even the most powerful GPU cannot perform optimally. That's where Micron benefits. As AI data centers scale, demand for high performance DRAM, especially HBM, that is high bandwidth memory used alongside GPUs, increases significantly. Every AI server requires large memory stack. So even though Nvidia gets the headline, companies like Micron are essentially suppliers inside that ecosystem. Now from a financial lens, Micron has historically been a cyclical business where few years have seen massive growth in revenue and profit and few years have seen sharp decline in revenue and profit. If AI-driven data center demand continues to grow, it can support stronger pricing and utilization for advanced memory products. So Micron is essentially a leveraged play on AI memory intensity. If AI models keep scaling and high bandwidth memory demand remains tight, Micron stands to benefit meaningfully. But unlike software platforms, it remains exposed to semiconductor cyclicity. Sixth stock is SK Hynix. If Micron is a leveraged play on memory demand, SK Hynix is one of the biggest beneficiary, especially in high bandwidth memory. So HBM is essential for AI accelerators. Advanced GPUs require large stack of ultra fast memory placed very close to the processor. Without HBM, AI performance suffer. SK Hynix has emerged as one of the leader in HBM supply, particularly for AI GPUs. As AI data center scale, demand for HBM has surged significantly. So structurally, the AI opportunity for SK Hynix is similar to Micron, but with a sharper focus on HBM. From a financial perspective, revenue and pre-tax income has been volatile, but growth has been explosive in December 24. So if AI compute keeps expanding and memory intensity per server continue to rise, SK Hynix stand to benefit meaningfully. But just like Micron, it remains exposed to memory pricing cycle, which means volatility will always be part of the story. Now, if Nvidia designs the most powerful AI chips, someone has to actually manufacture them. That someone is TSMC. TSMC is the world's leading semiconductor foundry and sits as the most critical manufacturing layer in the AI value chain. As AI chips become more complex and move to advanced node like 5 nanometer, 3 nanometer and beyond, the technological barrier to entry becomes extremely high. Very few companies in the world can manufacture at that level, and TSMC is the clear leader. So the AI opportunity for TSMC is simple. If AI chip demand remains strong, whether it's GPU, custom ASICs or AI accelerator, most of those chips will likely be manufactured by TSMC. From financial lens, TSMC has delivered solid revenue and profit growth with more than 2 times growth in revenue and more than 3 times growth in pre-tax income in last 4 years. Going forward, the more AI chips the world needs, the more critical TSMC becomes. Now, so far, we have discussed the opportunities in AI sector and top companies to benefit from AI boom. But before investing your money, you should be clearly aware of the key risks. Let's discuss them. So first risk in AI growth story is capex cycle risk. Right now, hyperscalers like Microsoft, Meta, Amazon, Alphabet are spending aggressively on AI infrastructure. But history tells us that semiconductor demand often moves in cycle. So when the capex cycle slows down, it would directly impact the revenue and profit for AI companies. Then second risk is valuation risk. Due to massive growth in last few years, AI stocks have already witnessed strong valuation re-rating in last 5 years. Nvidia is up around 15 times, Broadcom is up more than 5 times, Micron is up more than 4 times in just 1 year. SK Hynix is also up more than 4 times in last 1 year. Considering the future growth, market is already giving a premium valuation today. But there's always a risk that if the earning growth slows down due to capex slowdown in future, then valuation can derate. Then third risk is competition risk. Although all 7 companies we discussed are leading the AI race, we cannot ignore the competition risk, especially in tech-oriented companies. Fourth risk is geopolitical risk. A large part of advanced semiconductor manufacturing is concentrated in regions like Taiwan and South Korea. Any geopolitical tension can disrupt the supply chain and impact the entire AI ecosystem. Overall, this current AI boom looks very similar to internet boom of late 90s and early 2000. Back then, internet was clearly a real structural shift. It was obvious that it would change commerce, communication, media, everything. And it did happen. Today, internet is part of everything that we do. However, during late 90s, market already factored in massive growth and internet companies commanded crazy valuation. Eventually, the bubble burst and many internet companies disappeared. Even the strong companies like Amazon tanked 85 to 90%. However, companies like Amazon, Google, Facebook emerged as clear winner of internet era and created generational wealth for investors. I believe that AI companies would also do something similar. Today, I don't know if we are near the peak of AI cycle or not. But one thing I know, AI is structural just like internet. Hence, I neither want to invest in lump sum nor want to wait for a perfect bottom. I believe the best approach to play this AI theme is to invest in some of the most promising AI stock in SIP mode. At the same time, I would be ready to face the volatility. The problem is, many people get too greedy during the upcycle and end up investing lump sum. And people lack conviction during down cycle and they end up selling the stock out of panic. You can't create wealth like this. The most rational approach to participate in AI journey today is via SIP mode and be mentally prepared to face volatility. If you can do that and accumulate top AI stocks in a disciplined manner without worrying about volatility, AI can be a massive wealth creator over the next 10-20 years. At the same time, ensure that you don't do concentrated bet on AI sector. Have a right asset allocation with investment across sectors. The good thing is, on Vested app, you can start with as little as $1, thanks to the fractional share ownership in US, and even set up SIPs in US stocks and ETFs. Well, let me not stress this video further. I hope you got a fair idea about top companies leading the AI race, the opportunities, as well as key risk and growth thesis. To invest in these companies, you can try Vested app from the link in the description and get $10 deposit bonus. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.